Welcome back, everyone. In today's video, we're talking about HIMS and HERS Health, HIMS stock. Now, if you look at the chart, HIMS has had quite the roller coaster lately. 52-week low, $11.20. 52-week high, $73 per share. Currently trading at $26.76, down 9.26% today. Okay, so yeah, in today's video, well, first off, Shama says to like and subscribe. So yeah, in today's video, we're discussing HIMS, and we're going to discuss basically my investment thesis in HIMS. Is HIMS a buy or is HIMS a sell? Are they going to $0 or are they going to $1,000? So yeah, I'm going to give you my price prediction on HIMS on what I think they're worth today. I've done a DCF on HIMS. You can download that DCF at my Patreon for only $1. It is a can't miss. Now, I also do DCFs on many other companies, not just HIMS. You got Tesla, Nvidia, AMD, and about 20 different companies. But yeah, what is HIMS? So what HIMS does is they specialize, they're a telehealth company, and they specialize in stigmatized medicine. Now, what is a stigmatized medicine? It's basically medication that you may not want to go to your primary care physician about, where you might be having issues with, sexual function or, hair growth or skin quality, things of that nature. That's where HIMS' specialty lies. So they are a niche in this telehealth operation, and actually probably the only profitable telehealth company. Now, as you can see here, they specialize in, sexual function, hair, weight, anxiety, longer sex, and smooth skin. Of course, they have to mention that word twice. And recently, last year, what grew HIMS greatly was GLP-1s. However, HIMS has basically stopped selling their own generic GLP-1s as of the end of Q1. So that's no longer an ongoing thing. However, there is a gotcha to that. We'll discuss that later. There's another thing about that, but we'll discuss that in a bit. Now, the thing is, HIMS does more than just GLPs. People basically just attributed HIMS to being a GLP company, and that's all they valued HIMS as, was a GLP company. So when HIMS stopped selling GLP-1s in Q1, their stock tanked. That's why it went from $73 to $26. But they do far more than GLP-1s, and honestly, this is my base case for my bull thesis in HIMS. So yeah, as you can see right here, get ED treatment started today for only $5. And this is one of their advertisements. So they can do, this is the thing, is they can do advertisements unlike most other companies. Like Amazon Pharmacy, they can't advertise like this. Like those big companies, they cannot do this. Only small companies and specialized companies like HIMS can advertise quite like this. Now, last year, United Health Group's Optum eliminated their virtual care service. Why? It wasn't profitable. But as of then, it was a 3-year-old service. Now, who is the man? The man at HIMS is Andrew Dudum. He's the CEO, and he is a rock star. He's right there. And yeah, he knows the industry better than anybody else I've seen. And he knows the ins and the outs, and he can tackle things before they become the hot new item. He knows the hot new item before it becomes the hot new item. And he jumps on that train immediately. An example is they're going to be going into liraglutide soon, within I think like a month or two, and they're also transitioning into actual food, dietary food supplements and things along that nature. Going back to advertising, this is another one of their ads. Now let me ask you this. Let me hide my face really quickly, and let me ask you this. What other company can get away with an advertisement like this? And I think you can tell what kind of product that's advertising. So yeah, what's going on with HIMS? HIMS warns it may stop selling compounded weight loss drugs at the end of Q1. Okay, so the thing about GLPs is this. They were allowed by the FDA because of shortages from the major suppliers. You had a couple major suppliers. You had Novo, you had Eli Lilly. Those were the two major suppliers of GLPs. Now, HIMS created a generic, where they were selling a generic of Novo's GLP-1s called semaglutide, not Eli Lilly's. Eli Lilly's was a separate one, and that was actually resolved prior to this one being resolved. That one was already resolved, and the FDA said, okay, the compounded generics cannot sell Eli Lilly's anymore. But now they've also said the same about Novo Nordisk's. So HIMS is not allowed to sell Novo Nordisk's generic compounded medication any longer as of the end of Q1. Does that matter? We'll see. But yeah, this is a short-term headwind, but it's not a long-term headwind. Why? Because the inner strength of the company, and it is a strong company. If you watched the Super Bowl, you may have seen their ad. So yeah, they said that their traffic spiked 650% after their the Super Bowl ad, which you may have seen. I do have HIMS. Full disclosure, I do have HIMS in my Patreon portfolio, which you can view on Patreon. But yeah, my HIMS position there, I started this position in May of last year. It is up 124%. This is after the drawdown from $73 per share, so it was a lot higher. So yeah, how does HIMS work? So basically HIMS works like this. Obviously, you have the advertising. Marketing is the biggest spend for HIMS and Hers Health, but as a percentage of sales, that's going to be decreasing over time. So basically what happens is you complete an online intake form, basically like a survey, what's up with you? And from there, you get to talk to a physician, and then through that conversation with the physician decides what to do, essentially. So yeah, it's pretty automated. It's actually a low cost option for HIMS and Hers Health, and I will go over that. Now, how's the competition doing? So the competition, primarily the big dog in this category, is called Teladoc, and they have not been healthy. Now, this is their Teladoc stock. This is their stock last year. May last year was $11.48. Now Teladoc is $7.88. Why is Teladoc trading so cheap? Market cap $1.3 billion. Why are they trading so cheap compared to HIMS? Where's the money? Where is the money indeed? Trailing 12 months net income is negative $1 billion at Teladoc. And only $2.5 billion in revenue. They are a shrinking company. They're just, yeah, where's the money? Where's the money? And I don't like investing in unprofitable companies. By the way, this chart, this was from yesterday. That's why you see it's up 10%. That was yesterday's price. Where's the money? Is it HIMS and Hers Health? They are profitable. They became profitable this last year. And yeah, they have a net income of $126 million trailing 12 months on total revenue of $1.4 billion. And guess what? That is only increasing significantly. They're at the beginning stages of their S-curve. So you can see here the revenue is climbing. CAGR is 79%. The gross profit CAGR is, you can see in the numbers up here, 80%. Operating income CAGR is 159%. You can see their revenue is just accelerating quarter over quarter, especially Q3 over Q2. That is an enormous jump. Absolutely enormous. The same thing with subscriptions. It just keeps going up like the S-curve. And yeah, the numbers are fantastic. What is the 2025 outlook? The 2025 outlook. See, the thing is, I made a decent valuation of HIMS in May last year. This is the update to that valuation. And in that valuation, I had them pegged at much lower growth than what they actually grew at. I was thinking they were going to grow about 40% last year. They grew 60%. No, actually, no, 70%. They grew 70% last year. And they're projecting in 2025 to grow 60%. With an adjusted EBITDA margin of about 12.5%. See, the thing is, they're projecting to grow 60% this year, but this includes stopping. They don't account for GLPs after Q1 of this year. So they have 3 quarters of no GLPs, and they still predict 60% growth this year, even without GLPs. That's why GLPs were only an additive to their growth. They accelerated their growth. They gave them the blue pill to their growth, but they weren't fundamental in the underlying value and the underlying strength of the company, because they are growing strong and even stronger than before they added GLPs. The year before they added GLPs, they're growing 40%. Now they're growing 60%. Again, without GLPs. Without GLPs, without GLPs, they're growing even faster. They have 85% long-term retention, which is excellent, especially in this field. And weight loss revenue of they're projecting is going to be at least $725 million in 2025. Again, this only includes GLPs in Q1, plus a liraglutide, which is going generic, and some other odds and ends. And plus, they're going to be selling I'll discuss that in a bit. So yeah, what they have is they have this flywheel going on. So then what happens is you can actually start off on, well, really any of these. But yeah, as they get more subscribers on the platform, they get additional structured data and deeper insights, which drives data-driven personalization solutions and services, which drives higher quality outcomes, which drives more subscribers. They didn't include advertising on this, which we'll get into in just a second. But yeah, these are the main fields, and this is what they estimate the TAM to be in each of their categories. And they are increasing the number of categories, which is what makes this an exciting opportunity. Sexual health, they're estimating at an 80 million population TAM. Dermatology, 80 million. Mental health, 100 million. Weight loss at 100 million. But yeah, if you go back to their subscriptions, they've only got about 2.2 million subscribers. So this just shows how much they can still grow from here. How much they can still grow. That's what this means. And honestly, TAMs are kind of just made up by the companies. I don't put too much into it, but that's what the company thinks the TAM is. The question is, how much of that TAM can HIMS get? So in this particular category, what this chart is this, you can get this off their earnings report. And what this is what they estimate their market share to be over time. So you can see 2020, HIMS and Hers Health had 10.1% market share, actually smaller than many of their other competitors. For example, you can see Roman here. At the time, they were smaller than Roman, which had 15.1% market share, and Roman is Ro. You may have seen Ro's advertisements, and Ro also can no longer sell GLP-1 medications, which was what drove Ro's growth from 2023 to 2024, from 8% to 13.5%, was primarily GLPs. But again, generic GLPs are no longer allowed. But yeah, HIMS is currently sitting on 47.5% of the market, and they're just clawing share left and right. So yeah, what are the financials for last quarter? Last reported quarter revenue is up 95% year over year. Net income was $26 million compared to $1 million the prior 1 year ago. Adjusted EBITDA is up 163%. Operating cash flow is up 300%. Free cash flow is up 452%. Subscribers was up 45%. Now, the thing is, HIMS is a recently profitable company. That's why these bottom line numbers seem large, is because it's recently profitable. When you go from $1 million to $26 million, that's going to be a high percentage change. So focus more here on revenue and then also subscribers. Those are the primary things I would focus on here, are those two, revenue and subscribers. And those are both growing fantastically. But yeah, if you look at the full year numbers, revenues are up 69%. 69, and subscribers are up also 45%. So yeah, everything's just chumming along. Net income, as mentioned, up $126 million. And also they're making more money per customer. Their current monthly average online revenue per average subscriber is $73, which is up 38% year over year, driven primarily by GLP-1 medications that may go down this year. We'll see. The other thing is, HIMS' marketing is becoming more efficient. And as HIMS becomes a bigger brand name, they're getting more of their marketing spend. So what this chart is what they're saying is, in Q1 of 2024, how much they paid in marketing expenses was $113 million. And then from those marketing expenses, how long does it take to claw back? Basically, how long does it take for it to pay for itself? And you can see here, it's between 2 to 3 quarters it takes to pay back the $113 million, which, as they say, is less than 1 year. So it's a less than 1 year payback period for per marketing spend, which is excellent return on their money. And that's much better than before. Before it used to take years to get back the marketing dollars. Now it's less than 1 year. because they've become much more efficient at it, and again, much bigger brand name. Long term, they're projecting adjusted EBITDA margin of 20 to 30% and gross margins in the mid 70s. That's the other thing about HIMS. Their gross margins are huge. That's because they are vertically integrated. A lot of their competitors are not. So they own their own pharmacies, 503As, and also a 503B, which they use to produce their own medications. And that gives them excellent margins. Now, what are the risks? The risks primarily revolve around competition. So you have the big guys like Novo and Eli Lilly and the other drug manufacturers. Obviously they want less competition, for them the better. Plus you got the new guys like Ro and the other companies like that. So it is a thing, but even with the competition, HIMS is gaining market share. Oh, and the other thing to mention is the Amazon pharmacy. But again, the thing about those companies, especially Amazon pharmacy, is they don't target stigmatized medication. So they can't advertise the way that HIMS advertises. Just watch their Super Bowl ad. You can check it out on YouTube. Watch their Super Bowl ad. The other risk is regulations. Obviously, healthcare is a highly regulated industry. And they have a marketing-driven growth model. About 45% of their revenues they spend in marketing, which is very high. And also is the question of what they invest in. Do they concentrate on getting profits, or they spend money and concentrate on growth? So it's kind of a balancing act there. Obviously, right now, the profits are very high. And they're spending as well. So they're actually getting both profits and growth at this moment. But yeah, these are the primary risks as I see them. But again, this is a company worth $6.5 billion. It's my favorite small cap company, and a PE of $55. And don't worry, soon I'll get you my my price target, my fair value for HIMS in just a moment. So yeah, a couple other things to discuss. What do we have to discuss here is this is their statement, their operating statement. And as you can see, we already went over most of these numbers. Not too much else to discuss here. So let's move on. The other thing is their balance sheet, which I haven't gone over yet, have I? You'll notice something interesting here on their balance sheet. There's two things that are interesting. Number one, where's the debt? Where is their debt? There is no debt. I love companies with no debt. So it doesn't matter what the interest rates are. No debt. So anyway, the other thing of note here is compare their assets to their liabilities. It's a huge differential. It's like almost a 4x. It's like a 3.5x more assets than they have in liabilities. And that is a huge number. And this gives them a total stockholders' equity. It's growing massively. It grew to $130 million year over year. The stockholders' equity. It's just growing exponentially. And it's not often you see a company with this divergence between their assets and their liabilities. So that means that the company could shut down today. We get a lot of money because they got a lot of assets on hand and not much liabilities to pay. And again, no debt. So what does Wall Street think? Wall Street is, let's be honest, Wall Street's kind of dumb, in my opinion. They rate HIMS as a hold. At $26 per share, they rate it a hold, even though they're predicting a 49% upside. Who does this? They predict these are their numbers. These aren't my numbers. These are not my numbers. These are their numbers. Wall Street is predicting a 49% upside and a hold. Doesn't make sense. It doesn't make sense. But as you can see here, 4 strong buys, 1 buy, 7 holds, 1 sell, 1 strong sell. It's insanity. So yeah, again, before I get to my price, again, you can actually download my DCF on Patreon. It's only $1. And yeah, you can download the spreadsheet and change the projections as you see fit and come to your own fair value. Because what's more important than my fair value? What's more important than Wall Street's fair value on HIMS or their price targets, so to speak, is what you think HIMS is worth. So you can download this DCF spreadsheet, plug in your growth projections for HIMS, and you can do things like margins, EBITDA margins, and things like that to your liking, to what you think they're going to do in the future. and it will tell you what your fair value is for this stock. For me, it's $132 per share. That is the fair value on HIMS, in my opinion. This is given the growth projections, their accelerating growth, and this is over a 10-year period. I do 10-year DCFs. Now, this number may sound crazy. So if you think it sounds crazy, tell you what, just go to Patreon. It's only $1. Download my DCF, and that will show you how I come to that number. I'm not showing it here because it's only $1. It's only $1. What have you got to lose? But yeah, again, Shamow says to like and subscribe. Thank you for watching, and I'll see you in the next one.